Ladies and gentlemen, Keiki here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.3%. There on the S&P 0.5%, semiconductor 2.6%, Dow pretty much flat, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are green today. Bitcoin up about 5%, gold, silver miners are up a little bit, dollar down, oil up, treasury bond down, the rates are up. Fixes up a little bit. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed on Friday. It looks like we actually saw a little bit of gap up this morning right here. This is where we opened today. You know that we actually been gapping up more than gapping down. As you can see last week, this is on one of the days, this is where we closed. We gapped up here and then faded all the way. The next day it actually gapped down, but then the day after that, we gapped up again and faded all the way. So what I'm trying to say is, after a gap up, it looked like the market likes to fade all the way back down. It happened here and here. For some reason today, it actually did get faded. Not all the way though, not all the way to the mid-term moving average. It looks like it finds support on the long-term moving average right here and stayed above the short-term. Long lower wick tells us there's a volatility there on the first hour. On the second hour though, you can see the micro term was right all around it. Third hour move. On the fourth hour, bulls really made a run for it here. However, look at see long lower upper wick with the shooting star candle. However, the shooting star candle was never confirmed. We didn't see the follow through to the downside. What we saw was the fifth hour pretty much nullified the shooting star candle there with that green body.
Perfect.
First time, looks like we were able to hold above the micro term moving average on the last hour. So we did close above the micro term today. However, we did the same just several sessions ago. You can see we stayed above the micro term. Next day, market just gapped right back down. So bulls really need to avoid gap down scenario tomorrow morning. I think if we don't see a gap down, because you can see there's, again, we stayed above the micro term, it gapped down, gapped up, faded. We stayed above a micro term, gapped down, gap up, faded, gap up, faded. We finally managed to stay above the micro term once again. However, if we see another down gap, we're gonna go right back into this choppy sideways price action there. So bulls, if they can avoid gap down by thrusting it up or even gapping up, that will do the trick here. So bulls must stay above the micro term at least 2-3 hours of tomorrow morning session and go after this down gap at 415. Ever since this down gap wasn't filled, here, as you can see, things are extremely difficult for both bulls and bears. The market really not finding any traction, just moving sideways, making everybody so frustrated. So this down gap needs to be filled if you do want to see a traction to the upside. Obviously, bears are desperately seeking to keep this down gap protected because ultimately the bears are looking to fill this island up gap. Remember, the longer this island up gap is protected, the more bullish sentiment is gonna be increased. Especially if this down gap gets filled. Let's check out that oscillator. Well, this is a bad news for the sellers here because now we have what is known as a bullish divergence. So if I go to line chart, we can clearly see that we do have not lower low, but we have equal lows here, right? And however, on the oscillator, we do have definitive higher low here and broke above the neckline today and thrusting above.
Perfect.
So it looks like the bullish divergence is kind of a full force here.
Perfect.
So with the bullish divergence and staying above the micro term, because last time when it stayed above the micro term, we definitely did not have the bullish divergence, yes? So this is the first time that the price staying above the micro term with the bullish divergence. So what the buyers need is just to substantiate that bullish divergence by creating that price higher. At minimum, it needs to hold above the micro term with strength at least 2 hours and go after filling this down gap. I think that would give us this oscillator. You can see as oscillator not overbought at all. We have a lot of room here. That's about a day of a full bullish day, or maybe day and a half to 2 days of a slightly grinding higher type of day. I'm gonna come back for you. We'll read. So that's the situation. Enjoy your evening. Go trading tomorrow.